Back in September 2025, at a private masterclass for his global macro investor subscribers, Raoul Pal made a prediction that a lot of people dismissed. He looked at the global debt cycle, the refinancing schedule, and the amount of sovereign debt coming due across the world's largest economies, and he said 6 words that now sound like prophecy. He said, "This is the 12 months where maximum money printing comes." At the time, Bitcoin was trading well above $100,000. Markets were relatively calm. There was no war, no oil crisis, no global emergency that would force central banks to act. A lot of people heard that prediction and shrugged it off because there was no obvious trigger. What would force governments to fire up the money printer again? Now we know. 2 weeks ago, the United States and Israel launched a joint military operation against Iran. Since then, over 15,000 targets have been struck. Iran's former supreme leader was assassinated. His son, Mojtaba Khamenei, has taken over and immediately escalated the conflict. Iran is now launching waves of drones and missiles at every Gulf state that hosts American military bases. Dubai's international airport has been hit. Saudi oil facilities have been struck. Kuwait, Bahrain, Qatar, the UAE, all under attack. 13 American service members have been killed. Over 1,300 Iranian civilians are dead. More than 3 million Iranians have been displaced. And then Iran did the one thing that changes everything for the global economy. They closed the Strait of Hormuz. That narrow waterway between Iran and Oman carries 20% of the world's daily oil supply. 1/5 of all the oil consumed on this planet passes through that strait every single day. Iran's new supreme leader declared it closed, banned all ships carrying oil to the United States and Israel, and said it would remain shut as a tool of pressure. The Islamic Revolutionary Guard Corps went further. They said they would set the entire region's oil and gas infrastructure on fire if Iranian energy facilities are attacked. They fired on 2 vessels that tried to pass through. They set 2 oil tankers ablaze off the Iraqi coast. Iraq has suspended all oil terminal operations. The result is exactly what you would expect. Oil exploded. Brent crude surged past $100 a barrel for the first time since 2022. U.S. crude jumped nearly 30% in a single day, the biggest surge on record. Goldman Sachs revised its oil forecast up by 20%. Saudi Aramco was forced to shut down production at 2 major fields because their export routes are blocked and their storage is hitting capacity. And the shockwave hit everything. Japan's Nikkei dropped over 7%. South Korea's Kospi fell 8%. The Dow lost over 800 points in a single session. Asian markets are in freefall. Recession odds on Polymarket have climbed to 41%. The whole world is watching this unfold in real time. But here is where it gets strange. Here is where Raoul Pal's prediction starts to make sense in a way that most people are not seeing. Bitcoin did not crash. If you are new to this channel, make sure to subscribe and hit the notification bell. We are covering this war and its impact on Bitcoin and your money more closely than anyone else. Bitcoin is sitting right around $70,000. In the middle of the biggest oil shock in years. In the middle of a regional war involving multiple countries. While every other risk asset on the planet is bleeding. Bitcoin is holding. That is not normal. And if you understand what it means, it could be the single most important signal of 2026. Let's break down why. At another appearance, this time at Binance Blockchain Week in late 2025, Raoul Pal explained his entire framework in one sentence. He said, "Liquidity drives this market, not the halving, not the news. Liquidity. The correlation between Bitcoin and global liquidity is 90%. It's hard to refute that this is not what is happening. If that is true, and the data overwhelmingly says it is, then the question every Bitcoin holder should be asking is not what the war does to Bitcoin in the next 2 weeks. The question is what the war does to global liquidity over the next 6 to 12 months. And the answer to that question is simple. Wars create money printing. They always have, every single time. Here is how the chain reaction works. Wars cost money, enormous amounts of money. The United States has deployed aircraft carrier groups, Marine Expeditionary Units with 2,500 Marines, fighter jets, refueling tankers, and thousands of service members to the Middle East. Every interceptor missile fired by U.S. allies costs between $1 and $4 million. Bahrain alone has intercepted over 114 missiles and 190 drones in 2 weeks. Saudi Arabia is shooting down dozens of drones daily. The defense spending required to sustain this conflict across multiple countries is staggering. But it is not just defense spending. Oil at $100 a barrel means higher gas prices at the pump, higher shipping costs for every product on every shelf, higher food prices, higher heating costs, higher costs for everything. That means enormous political pressure on governments to provide relief to their populations. Stimulus checks, energy subsidies, emergency spending packages. And where does that money come from? It gets printed. It always gets printed. In a 2024 interview with Anthony Scaramucci on Wealthion, Pal explained this dynamic perfectly. He said in 2008 the central banks discovered the money printer. The money printer is essentially debasing the currency by printing more currency. Now it's dressed up in a nice term called liquidity. He then added something that directly applies to what is happening today. He said, "We are exchanging a debt crisis for a slow debt crisis. The slow debt crisis is the printing of money. That is exactly the playbook we are about to see unfold again." The Iraq War led to trillions in spending and easy monetary policy. The War on Terror led to a decade of money printing. COVID led to the most aggressive monetary expansion in the history of the global financial system. And what happened to Bitcoin after COVID? It went from under $10,000 to over $126,000 at its peak. Every single war and crisis in modern history has ended the same way. More money, printed into existence, flooding the financial system, devaluing the currency, and sending scarce assets higher. Now, if you are finding this valuable, make sure to hit the like button and share this with someone who owns Bitcoin and is panicking about this war. The information in this video could completely change how they think about the next 6 months. There is another reason Bitcoin is holding that most people are overlooking. The institutional floor underneath this market did not exist during any previous oil crisis. Spot Bitcoin ETFs now hold over $93 billion in total assets. Even during the worst of the selling this month, ETF outflows have been surprisingly modest. Michael Saylor's company, Strategy, just purchased another $1.28 billion worth of Bitcoin in the first week of March. They now hold over 738,000 Bitcoin, more than 3.4% of the total supply that will ever exist. And here is the part that matters. Saylor is buying at a loss. His average cost is over $75,000, while Bitcoin trades at $70,000. But he is accelerating purchases, not slowing down. That kind of institutional conviction creates a price floor that simply did not exist when oil spiked in 2008 or 2022. On top of that, there is a historical pattern that almost nobody is discussing. Bitcoin has bottomed when oil peaks. Look at the data. In October 2018, oil hit its cycle high and Bitcoin was at its bear market bottom. In June 2022, oil peaked above $120 and Bitcoin bottomed at around 17,000. Both times, the oil peak marked the moment of maximum fear, and Bitcoin rallied hard over the following months. The logic is straightforward. When oil peaks, it means the worst of the supply shock is priced in. Markets begin to look forward. Diplomatic talks, strategic reserve releases, new supply routes. The G7 is already discussing a coordinated release of 300 to 400 million barrels from strategic reserves. The U.S. government has issued new licenses allowing countries to buy certain Russian oil products to replace lost Gulf supply. Senior officials in the region are telling reporters they expect the war to last perhaps one more week before the U.S. and Israel declare military objectives met. If oil pulls back even 20% from these levels, the relief rally across risk assets could be fast and violent. Now, there is one major risk you need to be aware of, and it sits right around the corner. The Federal Reserve meets on March 17th and 18th. This is not a routine meeting. This is the first meeting where the Fed has to incorporate the economic impact of the Iran war, surging oil prices, and Trump's 15% global tariffs into its forward guidance. If oil stays above $100 and inflation re-accelerates, the Fed cannot cut rates. The dot plot could shift from one expected cut to 0 cuts for 2026. If that happens, Bitcoin will almost certainly sell off in the short term. Bitcoin has fallen after 7 out of 8 FOMC meetings since 2025. So the picture is this. If you are looking at the next week or two, the FOMC creates a real sell the news risk that could push Bitcoin towards 65,000 temporarily. But if you are zooming out to the next 3 to 12 months, the math is overwhelmingly clear. This war will force money printing. Money printing expands liquidity. Liquidity drives Bitcoin. That is Raoul Pal's framework, backed by a 90% correlation, and it has been correct through every cycle in Bitcoin's history. At that same September 2025 masterclass, Pal laid out what this cycle could ultimately produce. Using his models tied to the ISM Manufacturing Index and the global liquidity trend, he said Bitcoin could reach $450,000 before this cycle ends. He said, all the people who are saying it's going to 150 or 250,000 are probably scarred from the last cycle. Whether he is right about the exact number remains to be seen. But the direction is what matters, and every signal from this war, from the oil shock, from the institutional demand, from the money printing that is about to come, all of it points the same way. Warren Buffett said it best decades ago, and it has never been more relevant. Be fearful when others are greedy, and greedy when others are fearful. Right now, the crypto fear and greed index is sitting between 10 and 19. Those are the lowest sustained readings since the 2022 bear market bottom. The last time readings stayed this low for this long, Bitcoin was at $17,000. It then rallied over 600%. The question is not whether Bitcoin survives this war. Every war ends. Every market recovers. The question is whether you will be positioned when the money printer turns on. Because if Raoul Pal is right, and the last 15 years of monetary history suggest he is, this is the 12 months where maximum money printing comes, and Bitcoin was built for exactly this moment. If you found this valuable, make sure to subscribe, like the video, and drop a comment telling us whether you think this war is the biggest threat to Bitcoin or the biggest opportunity. We read every single comment, and we will see you in the next one.